And
Do you think though in the markets, in the trading markets, that it's starting to become, and I know this is probably along the lines of conspiracy, but you know, do we have we gotten to that point where markets can be manipulated at this point? I mean, look at the
sure.
what's that guy on TV? That guy Kramer or
Kramer?
whatever,
Oh,
right?
geez.
So it's like, I mean, the guy is the biggest scam. You know, like
I don't know how he's
I don't even know how he's still on TV. They literally have a fund that does the opposite of what he's doing. Okay, he put out a fund, it's bankrupt, but there's a fund of doing the opposite of what he says on TV, and that fund is still going strong.
Oh,
How
that's
is
crazy.
anybody listening to this guy? So, I mean, what do you know about market manipulation and how does that play into, you know, how
Well,
markets move up and
we
down?
we have a really good example of that with the 2008 financial crash, and basically, it was either inadvertent or on purpose fraud, which was to say that when they started to bundle these real estate packages, which basically consisted of really crummy loans, and they should have been rated, C, C minus. I don't know if they go down to D, but there was collusion or misrepresentation or misunderstanding, call it what you will, by the rating agencies, but they basically rated that many more grades higher than it should have been rated. And so
Mm-hmm.
the red flags that a lot of people like you and me, if we're investing in real estate, might have seen, had that been out there, had that been there correctly, they weren't there for people to see. So people kept investing, and you know, there all these bad loans basically came due on these, these real estate loans that were had a variable rate for a while, and then all of a sudden they get slammed with this big fixed fee. And people didn't understand that. And again, that was because of the education. Also, there was a little bit of more than a little bit of fraud going on when they were getting these things sold to them. But all that could have been avoided, I argue, if people had studied some of the stuff that we're going to bring out to people with this book. Is that what often, and there's a whole bunch of authors that want to talk about the magic of the market, the uncertainty of the investor, the problems with the entrepreneur, this, that, and the other thing. They want to make it all mysterious. Hey, there's a whole bunch of stuff that boils off to really solid relationships that you can just use. You have to dig them out. You got to do a little digging, dig here, dig there. But once you start to dig them out, oh, this thing just appears. And then you understand what the market is doing. And you say, well, I'm going to do this because the market's going to do that. And that's what we hope to be able to do for people, is to have them have the ability to point to what it is that they want to do and do it. Now, the great thing about the way the market's set up is that it doesn't mean that because one person's succeeding, another person has to lose. If you go back to the example of the anthills, I don't know if these entomologists, not to be confused with etymologists that study word, but entomologists that study bugs. I don't know if the entomologists have ever seen an outbreak of ants just going berserk because they can't find a place to live. I don't think that happens. The ants manage to work out a way. Oh, you live over there, and I'll live over here. My buddies are my 15th cousins are gonna live over there. Somehow the ants work out a way to get all their anthills in a way in which they seem to be able to get along with each other. Now, occasionally there's ant wars, just like there's human wars, but they don't make the papers. The entomologists aren't going berserk writing about ant wars. I did ant reconnaissance. What I didn't see was ant wars coming back at me. They're basically finding a place to be in their own little corner of the world. They're all happy, and they do their little ant things, and they're great. Well, but people need to be able to do their people things, and be great. And they got to find their own little corner
Right.
of the world to be able to do that in. Well, it's a lot easier to do it when you got yourself a map. And we basically try to tell people, here's how you create a map for yourself. Turns out it's in a few more dimensions, but turns out you can actually work through that and get the answer pretty easily. So
What do you think is going to happen to the stock market in the next couple of years? What's your prediction?
ah, geez, you got me there, Daniel. I would have thought that it would have stabilized by now, but I think what we're seeing is a big lagging effect. I mean, I went back and studied, talking about the currency going up by 400%, 4x. There's never been a currency rise to that extent in the history of in the history of the United States. Now, by the same token, they're reducing it by tremendous amounts over time, which is good. They did what they did. I think they realized that they might have overcooked it, to use their term, and then they're trying to, carve the turkey down or make the bird better, whatever you want to call it. So I think the market's going to be unstable for another year or more until the inflation gets roped in. Because right now, people don't know where to put their money. The stock market used to be a really good bet when there was low inflation, and now inflation's high. So where do you put your money? Well, people don't know, and
Right.
so it's confusing. It's confusing to the market, and it's confusing. So basically, the Fed has got enormous power over what's going to happen here going forward, and the Fed doesn't really have to answer to John Q. Public. They just do what they
Right.
do, and we bear the outcome of these results. Usually, they get it pretty close to right, but I think that they probably would admit that they didn't get it exactly right in early 2000 when they took the money supply up that high. So that can be a problem for people. I think it's a problem for the market.
And when you analyze a market or you analyze a stock, what are some of the processes that you go through?
Well, I can't give you all the secret sauce, but we like it when stocks are making money. So we might take out the ones that aren't making money. So our little process, since we don't look at startups, our process won't catch a Facebook in its inception. It won't catch Apple as it starts out. It won't catch the next big thing, because it's waiting to see how companies perform. What we're doing is we're doing what happened in Moneyball. We're looking at players that are
Right.
out there. They kind of look a little crazy to the average scout. They say, "Oh, he's too heavy. Oh, this guy's old. His arm strength is down." Of course, he's an outfielder so as they said in Moneyball, we don't really care what his outfielding skills are. We want to be on base.
Right.
We kind of
Give
look for
me
things
the
like
on base
that.
average. Give me the on base average,
yeah.
man.
And so we're looking for, what does a company make money? It does. Well, what's its PE ratio? Oh, it's low. Well, those are two markers right off the bat. It's got a high return on assets or high return on equity. It's getting dividends. It's doing this. It's doing that. The debt to equity ratio is low. I mean, you can take in software can take in literally hundreds of variables. We're going to probably expand to take in thousands as we go forward. But
It's awesome.
just with a simple, quick pass, you can figure out the things that are undervalued, and that's what we look for: is things that are undervalued, and try to buy those things. And it's basically a bunch of traditional benchmarks that you would probably recognize, but the secret sauce can't tell you exactly how we do that. I can tell you we can take several passes through it too. So some company might show up here but not here, and another company might show up here but not here. But when a company shows up with several passes in what they call an ensemble method, where you test it and you test it, you test it, you test it.
Right.
You might want to point towards that company and then look at that company and say, well, why is that undervalued? Maybe we do look at things like, is it being sued? Did their CEO leave? Has a new competitor come up with a vastly new product that they're getting the market doesn't like how they look now. Say it was like Blackberry as Apple launches the iPhone. Blackberry probably looked pretty good. Would look good to somebody like us, and then the iPhone comes along. You have to have some sort of allowance to be able to say, well, the technology just changed, and so we're going to be left behind. That's harder to predict, but what we're trying to do is to get the things that fall into the pretty stable conditions more often and try to go for those people and then those companies and invest in them.
If you like this clip and you want to watch another one, click right here. If you want to watch the entire podcast, click right here.